Okay, it's time we talk technicals now. We're joined by Richard Morris, the head of research. Richard, let's talk about sterling. Very relevant day to talk about sterling with the Bank of England inflation report out. An absolute collapse against the dollar of late.
Yeah.
Your sense of whether this move has got further to go?
My personal belief is that this is critical. It's the end of next week. It's at 152.46. If the market can hold above there, and obviously we're through there today, but if the market could hold above there, then we have got the chance to retest back to the 170.80. I've done this on a weekly to give us a sense of how dramatic the drop-off has been. But certainly, as we see it, it's got some huge problems. If we break through this point, then the target price goes down to 135, and I think that's a reasonable target. That gives it back to where the support in the market should be, and where the realistic major support has to come in. If it doesn't come in there at the 135 level, then I think sterling could be in a very much bigger problem than a lot of people expect. I mean, certainly in terms of euro, we were expected to get to 93, in terms of Swiss franc around the 164 level, and in terms of the yen, it's going to break 135. It could possibly go to 100.
What does the daily chart show us?
The daily chart is basically, again, we had that cross point which was very important for us to hold. When we did the bounce backs and we came back through here, we got another cross. It's a harmonic cross which sits there and says this market has failed here, and that's already part of the reason why we believe that we're now in a position where sterling is going to go and have a look at that 135 level. Certainly the day patterning has been very negative. This consolidation here around the 170 level was important. It was a major key level. As soon as it broke that, it said that we were in serious problems from here.
The euro, let's talk about that.
Yeah, euro. We've done a weekly chart, and there's a good reason why we've done the weekly chart. This is the euro against the US dollar.
Dollar, yeah, sorry, I was looking at the metric, yeah.
The big thing in it is that a lot of people are calling the end of the euro, but in our opinion, what we're seeing is a major retest of an overall longer-term pattern. If you have a look, we've got a cup and then the handle here, and it's natural for markets that do the accelerated breakout that they will come back and they'll have a look at this level. The big level for this market is 119.51. If it broke that, then it would negate the patterning, and you'd certainly be looking at going back to parity against the US dollar. We don't believe that's going to be the case. What we think is the market will come down here, start basing up around that 19 to 122 level. We'll start to see some good patterning. We're actually seeing the market at the moment, as much as we're seeing sterling under pressure, we're seeing in the euro the market actually sit there and trying to base build. It will, in our opinion, extend to that 1951 level, but ultimately we think these targets at 160 will be taken in the future, but it will be around the third quarter, I believe.
Let's wrap it up. Gold.
Gold, I think interesting market. We've come back. What we're doing is we're replicating this part that we saw back in 2005, where the market had a big rally up, came back, consolidated the break point. This market, big rally up, comes back, it's consolidating. 690, very crucial to the market, breaks that, then we could see a big fall off down to 545. Don't think it's going to happen. I think we will base around this 690 to 730 level, and then the market should get a run back up into the first quarter around 840. But third quarter, we're in the second phase of a fractured credit market. That means that gold has got one last hurrah to go, and we believe that market will take off those highs some point around the third quarter of 2009.